we now continue discussing our public finance and taxation critical area, which covers tax involving 8D level for Kasneb and CPA intermediate, CIFA, Certified Investments and Financial Analysts intermediate level. I think that's a foundation level, that is, for CIFA. And also important area in advanced taxation. And this is to do with investment allowances, also known as investment deductions. Now, because we have done our theory work, we have done our classes, we have finished our classes some weeks back. We've been revising taxation for the last few days. Now today I want us to revise on investment allowances or deductions. Now very briefly, I want to mention that investment allowances are also known as investment deductions, and they usually reduce your tax liability as a taxpayer, where a business is paying taxes, and this business obviously has non-current assets like buildings, premises, machines, computers, function fittings, and other non-current assets. Such assets usually, where a business is having such non-current assets, when this business is paying taxes, it is usually granted by the revenue authority an allowance, which means that such an allowance will reduce the tax liability of that particular taxpayer. Now, before I take my discussion with you, I just want to remind you that if you need public finance and taxation books, you can just have this one. My numbers, I think you have my numbers 0727 871093. We have these books. Now this book is ideal for the students who are taking public finance and taxation, 8D level, CPA intermediate, as well as CIFA. So this can be a good book for you as far as your revision is concerned. Now, I can mention a few things before I take, because I believe you are all waiting for the examination in 2 weeks' time. So what I want to do right now is just to show you some guidance on how to do with any question dealing with investment allowances. But if you have not been part of us, maybe you have not been studying with us, and maybe you are watching this video for the first time, I can just briefly mention something very critical as far as investment allowances or deductions are concerned. Now, one thing is that you'll be given, when you open your question paper in the examination room, first take the information given on the front page. On the front page, there are certain rates which are given there, and I just want to show you that area which has rates relating to investment allowances. And so just check what I'm saying. So because the rates, that's a simple area, it is a simple topic in other words. So when you open your question paper, just go to front page, and these rates are provided here. So you can see for investment allowances, you can see here investment allowances here, the rates have also been provided. You can see capital expenditure incurred on buildings such as hotel building used for manufacture, hospital buildings, petroleum or gas storage facilities, educational stock hostels buildings, commercial buildings. You can see the rates are given there. Rate of investment allowance, some 50%, others 10%. So that's for buildings. For machineries, the rates will also be given. Machinery used for manufacture, hospital equipment, all those items will be provided there. So that's very important for you. So try to understand that table, which will be provided on the front page. The moment you take your examination paper, uh, check what is on the front page, and those are very important areas for you when you go for the examination. So that is one thing that I just wanted to clarify for you. Now, I want to again uh, remind you that these items, these are capital items, we have three rates which will be used. Some you'll be using 50%, the others will be using 25%, 25%, and then the other, you will be using uh, 10%. The other will be using 10%. So those are important rates that I just want to remind you. That is, there are those items whereby you'll be using 50%, and they are provided. They will be provided on the front page of your question paper. 50%. Those items will be provided there. I'll still mention them here briefly. Others at 25% and others at 10%. Now, I want to just give you some of these items whereby you'll be using 50%, and those are will be classified as investment deductions, the ID. All the investment deductions will be granted at 50%. I will say that the items which are granted at 50%, that is known as investment deductions, it is granted at 50% in the first year and 25% on the residual value on the reducing balance. Now, note the items which will be found here. The items that will be granted 50% is for the buildings where manufacturing of goods take place and the machines and equipment which help in the manufacture process. Any other structures that help or support the manufacturing either directly or indirectly. So anytime you see an item like a building where manufacturing takes place, then understand that the rate that is the investment allowance that you've been granted on that particular building is 50% of the qualifying cost. So any building where manufacturing takes place also is those machines which help in manufacturing. So all machines used for the purpose of manufacturing should also be granted investment allowance of 50%, that is 50% of the qualifying cost. Okay, so that's warranting. So I think that is something that you must have noted, that buildings where manufacturing takes place, any machines, anything that is used in manufacturing within that building should as well be granted investment allowance at 50%. So that point, I think you know that. So in your book, that is page 202, where you have, for those who have this particular book, you have this book with you. Then page 202, you'll find those items which we grant 50%. And that is one, cost of construction of a building for manufacture, cost of purchase and installation of machinery used for manufacturing, cost of machinery and equipment used directly or indirectly in the process of manufacture, machinery used in connection with manufacture for the purpose of generation, transmission, and distribution of electricity. So all these things, I think we have granted, we have explained those items there, and we have a list of them there. Now maybe I can present them before your camera, so that if you do not have this book, you can be able to read those items which will be granting 50%. But if you have the book, you just go to page 202. But note here, those items which will be granted investment allowance at 50% are one, buildings where manufacturing takes place, or machines and equipment which help, in the manufacturing process. Okay, that's a point. I can present that one to you if you do not have the book. If you do not have the book, it's chapter 9, and you can still see the chapters there which are covered under the investment allowances deductions. Now, investment allowances, you can see there, decelerated claims at 50%. Uh, Now, this point here is very important. What you can see in this rectangle here, understand that point there. It helps you to know that any building where manufacturing takes place, all those machines which help in the manufacturing, then we should grant them investment allowance at 50%. Now, you can read for yourself point 1 all the way. So again, this point is important here, point number 6, auxiliary machines. So any machine which is helping in manufacturing, any building which is helping in all those machines which help in manufacturing, they are also granted that capital allowance at 50%. Now, my number again is here. If you need revision materials and maybe classes, you can still contact us through that number. Now, so you can read from point 1 up to point number 7, the items which we grant 50% are ID, investment allowance. Now, once you are okay with that, we can still move to the next page. The list continues there. The list continues on the other side. And so you can read from number 8, number 9, number 10, number 11, all the way. Then there are important points here which you can still try to check. These points are also important. After point number 13, then these points are also important. So try to check that. So what I have shown you in my book, that is my book, you can compare them. Compare what I've shown you in my book with what you'll be provided by the examiner on that particular page. The examiner will give you that. That will appear on page 1. That will appear on page 1. Now, once you have known that, I move to the other part now. As I have told you that these capital allowances, they'll be granted by using 3 rates, some at 50%, and you're saying those items which will be granted investment deduction at 50% are buildings or the building where manufacturing takes place, or anything else that helps the manufacturing process to continue. Including, for example, if you have a borehole which supplies the factory with water, that borehole qualifies for investment deduction at 50%, because that borehole is helping to support the manufacturing process. Things like sewerage systems. Sewerage systems which are maybe transporting waste materials from the factory to dispose the waste materials out of the factory, then such also qualifies for investment reduction at 50% because it is helping in the manufacturing process. So basically, buildings where manufacturing takes place, or any machines, or any other facilities which help in the manufacturing process. Okay, next, so that should be 50%. Now, next part are those items which qualifies at 25%. Now, the ones which qualify at 25% are motor vehicles, heavy earth moving machines, and electronic devices such as computers and scanners. So when you see those items there, either a motor vehicle or heavy earth moving machines like caterpillars or tippers, lorries which have maybe 3 tons or 4 tons or 8 tons, heavy earth moving machines, and uh, electronic goods, they all qualify for capital deduction at 25%. So motor vehicles, heavy earth moving machines, and electronic devices such as computers and scanners. Okay, I think that is, I'll present that one to you. You can just, if you do not have the book, if you have the book, it is page 203. The list continues then. Now we have done for 50%. Now we are looking for 25%. Now, those are the items. Now, this point is important here. Read this point here. It just gives you what is on the rectangle. It helps you to know those items which will be granted at 25%. So for motor vehicles, heavy hard moving machines, and electronic devices such as computers and scanners, so we'll be using 25%. So we have given some explanations down here. So you can read from point 1 up to point 6. Okay. Again, my number is down here. You need the book. So we go to page 204. There are 2 extra items there, which also qualify for the 25% rate. The trailer, that is permanently pulled by the lorry, and the fuming equipment. Okay. Now the last part now. So I think we are able to know those items, those capital items, where you'll be granting capital allowance at 25%. So simply, uh, motor vehicles and heavy earth moving machines and electronic devices such as computers and scanners. Now the last classification are those items whereby we will be granting at 10%, the IBD. Now this is granted at 10% per year, only reducing balance. Now this is for all other buildings other than those where manufacturing takes place. That is commercial buildings such as offices, stores, and the like. So any building where there is no manufacturing which is taking place. Because if you have a building and you are using this building for the purpose of manufacturing, then you grant capital allowance at 50%. What we started with, we say whatever building or whatever machinery which is helping the manufacturing process, then we should grant the capital allowance at 50%. Now we are saying other buildings now, like stores, go downs, maybe sports pavilion, maybe the staff quarters for the employees. Now these are buildings, however, there is no manufacturing which is taking place in those particular buildings. So if you want to see the difference between the two, just have in mind that for the investment deduction, which is granted at 50%, are the buildings where manufacturing takes place. Simple. So any other building where there is no manufacturing taking place there, then it qualifies for IBD, industrial building deduction. Those are called industrial building deduction, IBD. Now, the ones which qualify for 50%, we call them high D, investment deductions, simply. Now, these ones, the others now, we call them high BD, industrial building deduction. And we grant capital allowance at 10% on reducing balance. Now, we say that for all other buildings other than those where manufacturing takes place, like commercial buildings such as offices, stores, and the like, for furniture and fittings as well as partitions. So furnitures also qualify for IBD at 10%. Then for all buildings and structures for the welfare of the employees. So we have given a list there, quite simplified, for the items which qualify for 10% rate. For 10% rate, I just presented them. So read what is in my table here. This is just a very good summary of those non-current assets which will be granting 10%. And then you have maybe from 0.1 up to 0.6. Now, to summarize on that, I advise that if you want to understand that clearly, so what we started with those items which we'll be using 50%, and those are investment deductions. I've written using my biro there. 50%. You say there are the buildings where manufacturing takes place, and those machines which help in manufacturing. And then we gave a list there. Then we went to the other part, which was those ones where we will be using 25%. 25%. Just check what is on this rectangle there. And the others where we will be using 10%. Check what is on the rectangle, and then you look at this. Now the others now, I think because my focus was to attempt a question, you can just maybe pause your video and you study what is written down value. Then after that, the additional information, that is the other notes, because they are in the study text. They are in our study text, and I believe most of you have purchased the book. Those who have purchased the book, you have read the book. This is a time for revision. Read what is a commercial vehicle. When we dispose a commercial vehicle, what happens? The notes there. Also understand what is a trading receipt, what is a balancing charge, what is a trading loss, and what is a balancing deduction. Now, those are also important points when it comes to taxation of businesses, like taxation of partnerships and taxation of companies. So understand what is a trading receipt, balancing charge, trading loss, and balancing deduction. Additional information there like disposal value, how to go about it. Also understand the restricted values, what we mean by restricted values. Okay. Now, those are things that we did when we were doing our classes. Now, I want to show you a format now, because I want us to go straight away to a practical question. Because you'll be doing a question here, that's the format that you'll be using. The format that you'll be using, you'll be having 3 columns. The first one is for particulars, then decelerated at 50%. You've said any building, okay, you'll be given opening balance maybe, the written down value, the opening balance for those that class of items, and the second column now, items at 50%. We know there are buildings where manufacturing takes place, or those machines which help in manufacturing. Then the second one will be accelerated, the ones at 25%, and the last column is all items which enjoys 10% capital allowance. So you can see we have just tried to show how the items will look like. If it is factory buildings, the figure will be given, just write it here. It will be the first column. Processing machines, they help in manufacturing, they will be appearing in this one. Things like computers and printers, those ones are because they enjoy 25%. Then others like warehousing, these ones will be appearing on that particular part. Then after that, if there are disposals, you just less the disposals, then you get a certain figure here. So the figure which you get here, because you'll be taking the opening balances if they have been given, any additions you add, disposals you less, you get this figure here. Then this figure, 50% of this gives you the ID, investment deduction. Then if you less that, you get written down value, the closing balance. The same will apply on this column here, opening balances and additions. Then you multiply by 25%. Then finally you get written down value. The same to the last column. So that is what we expect. That is what you'll be expecting. Format of investment allowances format. Okay, that's what we will be doing in our question. Now, finally, I just want to move to my question now. Let's go to our question straight away. Now, let's go to our question straight away. Our question is where we are going now. Now, let's take our question now. We can take a question. Okay. Now try to look at this question. Try to look at that question. You are told. Can you see that question? Okay, just check it. Now first, just check it, then you pause your video in a minute. The example, Ken Cove Company Limited. Look at the information given, then additional information required. Statement investment allowance due to Ken Cove Company Limited for the year ended that 1st December 2020. Can you check that question? Just check it. You pause your video and you check your question. You did pause your video. You did check, pause your video. You did pause your video. Okay. You want us to start the question together? Very briefly, but you have to be active. You have to be active. You have done so many questions so far. Now you are told Ken Cove Company Limited is a coffee manufacturing company that was incorporated on 1st January 2020. The company commenced its operations on 2nd May 2020 after incurring the following expenditure. Okay, factory, land and building. Now one thing is that now factory obviously qualifies for ID at 50%, but land does not qualify for any capital allowance. So anytime you are given land, ignore land. Land does not qualify for capital allowance. So somewhere you'll be given the cost of land, which is part of factory land and building. You separate them. So factory land and building, conveyor belts. Conveyor belts, they help in manufacturing, so that will be 50%. Furniture and fittings, farm labor quarters, coffee milling machinery, irrigation system. And now you can see there are some items there which qualify for farm work deductions. Farm work deductions. Okay, irrigation system, borehole, construction of gabions, lorry, 3 tons, fencing of the farmhouse, tractor, go down, factory perimeter wall, delivery van, trailer for tractor, computers, 2 saloon cars, each costing 3,300,000, sports pavilion. So you're given the cost there, which were incurred for those non-current assets. Additional information. Included in the factory land and building is the cost of land valued at shillings 45 million. So I've told you land does not qualify for IB. So that is where you are given the cost of land. You less the 45 million from the 82 million to be left with the cost of the factory so that you may claim for ID at 50%. One of the saloon cars was disposed of during the year for shillings 2.2 million. Now, a saloon car is a non-commercial vehicle. The following assets were purchased on 1st August 2020. Office curtains, fax machine, water pump, parking machine. Required. Investment allowances due to Kasneb Company Limited for the year entered that 1st December 2020. Just pause our video again and you go through the question as I show you the solution. Now we have done a lot of classes concerning investment deductions. We've done a lot of revisions concerning investment deductions. Just go through the question. Now, you remember now our format. Now here what I do is that, remember, those items which qualify for 25% rate and 10% rate, what we calculate there is something called wear and tear allowance. Wear and tear allowance replaces what? Depreciation. So start with furniture and fittings. Now furniture and fittings, you are given their cost at 350,000. This item here, the furniture and fittings, qualifying cost. You see, you have a column here for qualifying asset, then qualifying cost, the rates are given. So you just put that furniture here, the cost of furniture. Furniture and fittings, 350. It goes to 10%. So 350,000 times 10%, the capital allowance will be that 5,000. The other item which qualifies for wear and tear is the lorry. This lorry here, and the qualifying cost was 3.4. Lorries go for 25%. 25% of 3.4, you get 850. Tractor, you are given tractor there. You have a tractor, you can see tractor here. This tractor goes for the cost of 3.6, 25% of that. Delivery van, you are given delivery van, which is here. Delivery van, 2.6 goes to 25%. Then trailer, 520,000. The trailer, see the trailer there? You see the trailer is here. The trailer for tractor, that one goes for 10%. So basically what we are doing is for wear and tear, what you do, you just take those items which we grant capital allowance at 25% and the others at 10%. You classify them together. Don't consider the ones at 50%, for 50%, those are called ID. Investment deductions, you do them separately, elsewhere. Okay, you can still have them, you can have a column just there for the 50% and for farm work deductions. It will still be okay. The answers will be the same. But this is how we have arranged our solution. You can see what we have taken first are those items which qualify for 10% and the others at 25%. We're just taking the qualifying cost times the appropriate rate. Now, once you have done that, you go on the other page. The question continues on the other page. We have computers. The question continues on the other side. We have computers at 720. Computers is 25%. Saloon cars, something called restricted amount. Now these saloon cars, I think you know what you mean by restricted value. They are restricted. We usually take only 3 million. Any extra amount. You can see saloon cars here, each costing 3.3. Now if you are given the cost of a non-commercial vehicle, any cost which is above 3 million for each car or for each non-commercial vehicle, you ignore it. We only take up to, capital allowances are granted up to 3 million for non-commercial vehicle. So any figure which is above, okay, if it was, for example, 1 million, we just have taken 1 million. 1.9, you would have taken 1.9. If you are told that the cost is 3.2, you just take 3 million. If you are told 5 million, you just take 3 million. So the restricted amount for the purpose of capital allowances for non-commercial vehicles is 3 million. So that's the reason why for these cars you have taken 3 million. For cars, you can see we have taken 3 million, and there are two of them. RR, restricted value. Okay, curtains, fax machines. These were acquired later on in the additional information. Here you are told the following assets were purchased on 1st August 2020. Office curtains, fax machines. Now water pump, now this goes to farm work deductions. Packaging machines, this goes to ID. They are helping in manufacturing. So we just take office curtains and fax machine, and that is what we bring there. Okay, so curtains, they qualify for 10%, fax machines 10%. Now disposals, now you are lessing. Disposals of loss, disposals, which is in additional information number 2, 2 saloon cars, no, that is one of the saloon cars was disposed of during the year for shillings 2.2, for 2.2 million. That information there. So you less that particular figure, however, take 25% of that. So finally, you can see what will happen then with that. So you show your solution that way. It has to follow one another. You start from there, where the table starts, where the solution starts. You still have the question from there. The question starts from there. The assets have been given up there. All the assets. We have started by taking the ones which we grant 25% and 10%. So your solution starts there. Then move, that is on page 207. Solution continues on page 208. That way. This way. That way. We continue on that side. Then lastly, investment deductions now. Now, investment deductions, we have said they are the buildings where manufacturing takes place. Where manufacturing takes place. or any machines which help in manufacturing now. Okay, for those buildings where there is no manufacturing taking place, okay, we grant them IBD actually, it's called IBD, but here we have just given them the 10% because the answers will be the same. So you can see what we have here: factory buildings, conveyor belts, milling factory, borehole. So we assume that this borehole, it is supplying the factory with water for the purpose of manufacturing. Borehole, perimeter wall, water pump, packaging machine, go down. So you can see go down. For go down, there is no manufacturing taking place there. But we assume that this go down is for maybe storing the raw materials or the finished goods. The sports pavilion is for the staff. We are granting them 10%. So you can see what we have done for investment deductions now. Now we are taking the qualifying cost, we multiply by 50%. The ID claim, investment deduction claim is here, then the residual value, the balance carried down. We are taking the qualifying cost minus the ID. So that is how your solution will look like for investment deductions. For investment deductions. Okay, so our ID for that particular year will be 26,864,000. So when you go to pay for your tax, then your tax will reduce by 26,864 because of the investment deduction. Also, you also consider this. The ID was that if 3,580 and 1,700, all these figures will be deducted from your tax liability. They reduce your tax liability. Then we have farm work. Farm work deductions is also important. Now, in this question, there are those items which we should grant farm work deductions. Farm work deductions are granted at 50%. So labor quotas, irrigation systems, fence, the gabions. You can see farm work deductions at 50%. If you less that, you are left with the residual value. But for the purpose of tax, what you are interested with is this, 5.4. This figure will reduce your tax liability. So when you start paying your tax now, you less this figure, you also less this figure, you also less this figure, and also that figure. Those are capital deductions. Those are capital deductions. So that is how we go about that. Now, let me show you the question from the start. You have the book, I believe you have the book with you. The question is page 207. Question is page 207. 207. 207, Kenkov Company Limited. That's where the question starts. Items are being given there. The items are being given there. The items have been given there. The question starts from there. Read the question first. You can first read the question and you compare with our solution. Read the question first. Read the question and then check the solution. Now this solution goes on the other side. My number is just down there. In case you need books for CPA, for ATD, for CIFA, also revision classes, online classes, as well as physical classes, you can just call me. My number is there. My number is there. Don't focus too much on the number, on my contacts. Focus mostly on the solution. The wear and tear allowances. You have seen the items which we grant 25% and the ones that we grant 10%. Okay, the solution continues on the other side. The solution continues on the other side. The solution continues there, and finally you are able to get your answers there. Then investment deductions. Investment deductions, they are there. There are also farm work deductions, finally there. So that is how you have calculated your capital deductions. Now, I'll take the last question there, but I think I should give you that as an assignment. Now, go through this one as an assignment for you. You can take a piece of paper and you write that question. Example, you are told elite manufacturers commenced operations on 1st January 2021 after incurring the following expenditure: factory building, processing machinery, to bracket cost, insurance and freight, delivery van, tractor, photocopier, generator, go down, workshop machinery, computers, saloon car, fax machine. The costs have been granted. I'm giving you this example, this for elite manufacturers, as your assignment. You take that assignment, continue on the other page, page 209, but if you have our book, you have the solution with you. You have the solution with you. Additional information. You are told processing machinery was imported from China and the company received a import duty waiver of 25% on the value of the machinery for duty from government. The VAT rate was 16%. Number 2, factory building include the cost of clinic, shillings 420,000, showroom 580,000, and a retail shop, shillings 600,000. A perimeter wall was constructed at a cost of shilling 540,000 and put into use on 1st September 2021. The company sank a borehole at a cost of shillings 300,000, which was utilized from 1st October 2021. A water pump costing shillings 45,000 was purchased and utilized from the same date. On 1st November 2021, the following assets were acquired: conveyor belt, surveillance cameras, water tank. Number 6, a sport pavilion and a staff canteen were constructed at a cost of shillings 780,000 and shillings 1,000,000 to 8,000 respectively, and used with effect from 1st December 2021. The saloon car was disposed of at shillings 1,920,000 in December 2021. Before I show you the solution, now that is your assignment. You have a study text with you. It is page 208. Elite manufacturer. The question starts from there. If you did not understand, you can pause your video and then maybe you can write the question. The question starts with there. The items are given there. The items have been given there. Go to page 209. For those who have the book, the question continues on page 209. The question continues on page 209, which we have just read. Additional information number 1, up to 5, 6, 7. Check the additional information, and then required investment allowances due to the company for the year ended that 1st December 2021. Now we have the suggested solution there. Now I've told you this is your assignment, but because I know you have the examination in 2 weeks' time, you can just take your assignment, take that question and compare with that solution. So investment deductions, we have started by picking the ID, the ones which we grant capital allowance at 50%, the ones we grant at 50%, and you'll say these are buildings, for buildings where manufacturing takes place, or machines which help in manufacturing. We grant capital deduction at 50%, 50% times the qualifying cost. Okay, that was the first step. Then from there, high BD, industrial building deductions. Now, industrial building deductions we grant at 10%, and simply these are all the other buildings where there is no manufacturing taking place, like godowns, canteens, sports pavilion, retail shops, all that. Any other building, so you say investment deduction which is granted at 50% is for those buildings where manufacturing takes place, or any other machines or any other structures which support manufacturing. Then industrial building deductions at 10%, any other building where no manufacturing takes place. Okay, the solution continues on the other, and the last page we are dealing with the wear and tear, where you take those items which qualify for 25% and the others which qualify for 10%. Consider the disposal. Okay, we have shown the disposal of saloon car there. There are some workings down there, and then you have your answers. So if you are to write a list of your investment, that is your capital allowances, what you consider is the capital allowance that you grant at 25% and 10%. The one which you have gotten, I think, 9, and the other 330,000, and the others. Now that is it for that. Now lastly, I'll just show you for the last where we have started. So my focus was to show you first your format that you can use when you are answering these kind of questions. The format should be something like that. That is your format. Then after that, you have done a question. You have done a question. An example. You have done an example, which you can just again. You can go through that. Question again, which you have done, and the solutions. The question was there. Kenkov Company Limited. Your question was there with additional information, and the requirement was there. The solution was there. We started with those items which are granted 25% and 10% capital allowances. We have discussed what they are. The solution continues on the other page. The solution continues on the other page. The solutions continues on the other page with investment deductions, which are granted at 50%, where manufacturing takes place. and those machines which help in manufacturing, we grant them 50%. But you can see, go down and sports pavilion, you're giving them just 10%. It's just the arrangement of our work. Go down, the last two items, you're using 10% because there is no manufacturing which takes place in the go down and in the sports pavilion. Then we also have farm work deductions. Farm work deductions, we grant 50%. Then your assignment, elite manufacturers. First, you can just take that assignment for elite manufacturers. You take the assignment. The question continues on the other side. The question continues on the other side. The question continues on the other side with the additional information. Just go through it. Then you are required investment allowances due to the company for the year entered at 1st December 2021. Solutions are there. Invested deductions, we are granting 50%. We have said the buildings, the machines, or anything that helps in manufacturing should be granted investment deduction at 50%. IBD, industrial building deductions. The buildings where no manufacturing takes place. There is no manufacturing taking place there. You go to page 210. The solution continues there again with those items granted 25% and the others at 10%. The answers are there. Perfect. That's enough revision for you. I believe if you come across a question for capital deductions, you'll not be in trouble. So I've told you the items which you'll be granting 50% capital deductions, and these are those items or the buildings where manufacturing takes place, and also those machines which help in manufacturing, or any other structure which offers auxiliary services to support the manufacturing. A good example we have said is a borehole which supplies the factory with water. So that borehole is supporting the manufacturing. So that qualifies for ID at 15%. So we have discussed that before. So those items which you grant capital or investment allowance at 50% are the buildings where manufacturing of goods take place, and the machines and equipment which help in the manufacturing process. Any other structures that help or support the manufacturing either directly or indirectly. So, and we gave a list of that. Then there are those items which we grant capital allowance at 25%, things like motor vehicles, heavy earth moving machines, and electrical or electronic devices such as computers and scanners. So any machine which is electronic, which uses electricity, and motor vehicles, you'll be granting them capital allowance at 25%. Then the last group comprises of those items where you grant capital allowance at 10%. All other buildings now. So all other buildings, you see, where the manufacturing takes place, those buildings, we grant them ID, investment deduction. Now, any other building where there is no manufacturing taking place, we call them industrial building deduction, IBD. We grant them capital allowance at 10%, like godowns, stores, warehouses, sports pavilion, staff quarters, staff canteen, all those ones, we grant them industrial building deduction at 10%. So for all other buildings other than those where manufacturing takes place, commercial buildings. So they should be commercial buildings to start with, not buildings which are at home. These are buildings which are for the purpose of business, like offices, the staff office, the staff quarters. The offices are being used for the purpose of business. They are being used by the staff members. So where the cost of these offices now for the purpose of paying taxes, we have to be granted industrial building deduction at 10%, not at 50%. For 50% is where manufacturing takes place. There is no manufacturing taking place in the office. The office, what is taking place there is administrative activities. So for 10%, we are saying for all other buildings other than those where manufacturing takes place, like commercial buildings such as offices, stores, etc. Furniture and fittings. Furniture and fittings also qualify for IBD at 10%. Furniture and fittings, including partitions, office partitions, and all buildings and structures for the welfare of the employees. That is what we have discussed. I think if you have been studying with us for from the start of the semester, I think you are very conversant with taxation. You do not have any challenge with taxation. Now, again, I remind you that if you need our books, I've given you my number. You have my number. Now, that assignment which I've given you for elite manufacturing, you can find it in April 2022, question 5C. April 2022, question 5C, CPA, intermediate, as well as CIFA. Now, very briefly, I can just show you some past paper questions from our book. You can just go through them, or you can take more. I've done one for you. You can just now remember this is our book. Now, those who do purchase our books, you are very familiar with this book in the market. This book, it is very familiar in the market. So we are the authors and the publishers of that book. If you need a copy, you can just call our number. You see our number in the footnote. So you can still have, now for example, the question that I've done for you, elite manufacturers, you can see is April 2022, question 5C. Now there are other questions now. We still have a collection of past paper questions. I can see the pilot paper there. You can attempt the others if you have time. You can check the others. You have so many questions. You can see December 2021. Kenkoff, we have done that. December 2021, question 4C. I've done for you in this lesson, December 2021, question 4C, Kenkoff Company is what we have done for now. We have also done the April 2022, question 5C, elite manufacturers. I've shown you the solution for that. Now I can show you some other questions. You can just pick them randomly. If you want to do questions for yourself, you can take any of those. September 2021, Lulu Limited. You can take Lulu Limited. Question 4C. To continues on the other side, Lulu Limited. Then May 2021, Plastcom. You can check that. Plastcom can see May 2021, question 4B. I can just go through the question. November 2020, Mafuta Limited. You turn to page 206. You turn to 206. You turn to 206. The question continues from there. The question, November 2019, Dalbury side. Dalbury side. If you want more questions for your practice, you can check from there. May 2019, Loki Marete. All these are questions that you can attempt. You can find them from your past papers, but if you do not have a past paper, you just use the ones that I'm presenting to you. If you have no past papers with you, November 2018, question 5C, you can use them for your revision. If you want the solutions, you can just call me. You ask whether I have the answers for you, including other CPA and CIFA papers, past papers, solutions for CIFA. We still have questions and answers for CIFA and ATD. November 2017, you can just try that. May 2017, Kiwanda Limited goes on the other side. May 2016, Nafaka Millers goes on the other side. Nafaka Millers. Now we are moving on. We are moving towards the end. November 2019. Pilot paper. What is a pilot paper? Do you know what a pilot paper is? Now the question is up to them. Pilot paper occurs when the examination body revises the syllabus, the new syllabus. Revision for the syllabus takes place after 5 years. So the last revision was the year 2021. So next year, we are expecting a major syllabus review. So we'll be having a pilot paper. But pilot paper is not taken by the students. It's just a paper which shows you how your future exams for the next 5 years will look like. Those are pilot papers. So I remind you that next year there will be a major Kasneb syllabus review. You have a few things will be disarranged here and there, but there will be more communication before that happens. So that is what we wanted to do for today, and that is we are revising about investment allowances and deductions, and I think you are able to understand what we mean by that. Now I believe you have my number 0727 87 10 93. So remember to subscribe to our video because you have examination in the next 2 weeks. So in case you have a challenge with taxation or any CPA examination, you call that number. I can just we can help you within those 2 weeks, and we can help you upgrade your marks. Maybe probably you could have scored 43%, and then I'll give you maybe something like 10%. Then you have 53, or even maybe you have to get 49%, and then give you 2 or 1, you are 50%. So if in CPA and ATD, in ATD and CPA and CIFA, if you want an assistance, for those next 2 weeks remaining, you can still call my number as I have given there. It is in my book, the footnote 0727 I can organize for your online classes either during the day or during the night, wherever you are. You can have a revision in those areas where you have difficulties, CPA, ATD, or CIFA. So this is a FATIMA Institute. We are based in Vika. So subscribe to our YouTube channel, FATIMA Institute, because for those 2 weeks remaining, we are having a lot of revision classes and we are uploading a lot of materials in our YouTube channel, so that whenever we upload these revision materials, you are able to take advantage of that. So today we have revised about capital deductions. Next revision, now we did VAT, so most of you are conversant with the VAT. VAT is the same as used in ATD, CPA, and CIFA, and advanced taxation. VAT is the same. Taxation of individual, we did that. You have it in our YouTube. Taxation of businesses, mostly. Taxation of partnerships and companies, you have it in our YouTube. You find it there. Now, what else have we done? I think those are the major areas for taxation. As far as now, apart from the advanced taxation, where you have cross-border activities and things like tax planning and taxation of specific different companies, like taxation of banks, taxation of insurance companies, taxation of leasing companies, taxation of hire purchase companies, taxation of unit trusts, taxation of all those different companies. Apart from that, which is in advanced taxation level, advanced level. Now, for intermediate CPA, intermediate CIFA, ATD, now the other taxation is almost the same, because it is knowing how to tax individual, how to tax business, and VAT, then capital deductions. There are those 4 areas where computations, you find computations. Those 4 areas. Know how to tax individual, know how to tax business, companies and partnerships, then value added tax, and then capital deductions. I think those are the areas which involve computations. That is for ATD, CPA intermediate, and CIFA intermediate. That is, let me confirm, taxation of business, taxation of individual, then VAT, and investment allowances. So there are 4 areas which involve taxation for CPA intermediate, CIFA intermediate, and ATD. For tax advanced level, the same items, you find them there, but when you come to taxation of a company, then we have a variety of different types of companies and how they are taxed, like insurance companies, the banks, SACCOs, hire purchase companies, leasing companies, unit trusts, among others. That's the major difference. So I think we have done our job for today. So just wait for the next class. So if it is for, if you get a class where we upload maybe taxation and you're doing tax, well and good. If you find that we have uploaded advanced financial reporting, don't worry, yours will be coming. If you find that we have uploaded management accounting and you are at advanced level, don't worry. But in our YouTube channel, there is a collection of so many videos discussing some of these issues. So that's enough for today. So we meet again. Thank you.